In this video, I am going to review my investing 101 secrets so you will have a clear plan to start your investing journey. Welcome back to my channel. My name is John Ritchie and I am a qualified chartered accountant. I have recently been asked to share about investing in 101 in my point of view. Learning to invest is like learning to drive. It does not matter what car you drive. If you don't know how to drive, you will eventually crash. It is like investing. It does not matter what vehicle investments that you choose, because what matters is you, because you are the driver. So you need to understand the principle of investing, which we will talk about next. Secret number one. First, you need to be able to manage your own money. I am not sure where your finances are at, but for me, I know exactly how much money I am making every single month. I know exactly how much expenses I am paying every single month. Once you know exactly how much income you're making and how much expenses you are spending, now you can either see whether you are saving money every single month, of which you can use it for investment, or whether you are losing money every month. If you are losing money every month, there are only two options. The first option is you need to get a second job to increase your income, of which you're gonna get taxed. But the easiest one is actually to lower your expenses. It means you will need to make sacrifices in the short term so that you can have extra money that you can invest every single month. For example, you may need to move to a cheaper house, or you may need to eat in a lot more. You need to cook instead of eating out. I understand how hard it is for myself to save money. I didn't come from a rich family. My family was struggling when I was growing up. I need to take student loan to be able to go to university. And I had to take 2 or 3 jobs when I was in university. Even after I finished my university, I still had 2 jobs. I did not have much choice because that was the only way I could support myself and my family. Once you are able to turn your finances around every single month, I am encouraging you to save that money. Save at least 3 months of your expenses for your emergency fund. Just in case if you lose your job or your business drops, you will have some savings that you can use to cover those expenses without selling your investment. Secret number 2, you need to have a clear goal. I will explain it in this analogy. Suppose I would like to go overseas, and then I'm asking one of my friends, Mr. Brett. I ask, Mr. Brett, would you like to come with me to go overseas? The first question Mr. Brett will say, where are we going? And I'm probably gonna say, look, I'm actually not sure where I am going, but I am gonna get on the plane and then I'm gonna figure it out later. I am sure Mr. Brett will tell me, no way I am getting on a plane with you. A lot of people invest without knowing where they are going and how they're gonna get there. 37% of investors did not have a financial long-term goal or how they are going to reach it. For my wife and I, our goal is very simple. We would like to have a passive income that are going to cover our expenses because we would love to spend more time with family. My parents and her parents are living in overseas, so we only get to see them a week in 1 year or sometimes only 3 weeks, and we would love to spend more time as much as we can with them. I actually created this video about how much money that you need to retire on $1,000 per week. Please check out the link above here somewhere. Once you know the number that you need to hit, for example, $10,000 in 12 months, you can work backwards and you know exactly how much you need to save every single month. Secret number 3, you need to understand the risk of each investment. When I studied for my chartered accountant, we had so many case studies, and in that case study, we need to understand the risk. What if the employee is leaving the company? What if there's a next market crash? Will the company survive? How much cash do they have? How much time does the company have until the business runs out of money? So it's been ingrained in me to look at an investment firstly through the lens of risk management rather than the return. So when I look at an investment, I always look at the worst case scenario. An investment with zero return is actually better than a negative investment. Also, you need to know yourself. Are you a risk adverse person or are you a risk taker person? For me, I am more like a medium risk taker, and I will not invest in something unless I understand about the investment. I am not trying to brag here, but because I've spent so much time understanding the property investment. It doesn't matter what property you are presenting, in Australia of course, I'll be able to tell in say 15 minutes whether that property is overvalued or not. Secret number 4, choosing the right investments for you. Generally with investments, there are 3 types. One is business, property, or shares, or you can invest in 3 of them. But for now, I'm encouraging you just pick one vehicle because it can take years to master one investment vehicle. In order for you to choose the investment, you need to know whether you have a lot of time or not. So you're either an active investor or you are either a passive investor. You just leave the investment there and let it grow without you touching it. So for myself, I've actually done active and passive investment. In property space, I have renovated the property myself. I go there every weekend. I paint the walls. I go to Bunnings to buy all the materials. I project manage all the electrical, all the plumbing, and all this stuff. It gives so much headache because it is like a second job. So if you don't have time for it, then I don't suggest you to do it. After I renovate it, I just rent it out to tenants. My property is a positive cash flow, so I'm actually making money every single month for it. And it's gonna give me long-term capital growth. Almost more than 50% of Australians actually prefer to investment in property. If you are a beginner, I am suggesting you to focus on the long-term investment, because short-term investments like buy and sell shares, trading options, or you play CFD or Forex, buy and sell currency, it is like a second job and it carries more risk. If you have a day job, I don't recommend you to do it. I mean, you can do it if you can say trade Forex between 7 to 9, and you need to understand when the market opens. Is it an Asian market? Is it a European market? Is it a US market that you are trading? So it is very complex and it requires higher skill. But when you invest in long term, you're not really worried whether the stock is gonna go up 10% or down 10% because you are in it for a long run. You're gonna be there for 10 years, you're gonna be there for 20 years. You're not really going to sell your investment when it drops. One of the most popular is actually index. It's going to give you a steady 7 to 8% annual return. So it's actually pretty good rather than you put it in the bank. Another investment that you need to also understand is whether you are chasing a high cash flow or high capital growth. So for example, Microsoft doesn't give you a lot of dividend yield. So the dividend may be like 1% or 2% per year, but you can expect a higher capital growth from Microsoft shares. That's just one example. So I've actually made a table between an active investment or passive investment and cash flow focus or capital growth focus. Secret number 5, invest consistently by understanding how compounding interest works. Albert Einstein said that the compound interest is the 8th wonder in the world. So let's say you are 20 years old today and you only have $1,000. You are going to put your $1,000 in the index funds, and you are going to put in $100 every single month from the age of 20 to 65. So you are going to invest consistently for 45 years, and say the market is going to give you a return of 10% annual return compounding year after year. So you are going to invest $54,000 in total, and your money will grow to $1.136 million. If you are a beginner, I would encourage you to invest as early as possible. It doesn't matter how much money you have, and just leave it in the market. Don't touch it, and I can guarantee in the next 45 years, that money will grow more than you can imagine. Secret number 6, how can you maximize your return? The only way you can maximize your return is to invest when nobody wants to invest. Warren Buffett said, "Be greedy when others are fearful, but be fearful when others are greedy." For example, I invested a lot of money when the market drops 30 to 40%. And because I took the opportunity to buy, I have made about 61% return in the last 6 months because of COVID. And this kind of opportunity only comes usually every 10 years. But I know it's not easy because you actually have to go against the market. You need to have the psychology, you need to have the mindset of investing when nobody else investing. I'll give you an example of one of my stock portfolio. It's a company called Afterpay. Before COVID, the stock price was about $40. Because of COVID, the stock dropped from $40 to $8. And I actually bought when it started to go back up again at about $16. And do you know how much the price today? As of today, the stock price of Afterpay is $89. It's even more before the COVID. So these are the kind of returns that I made in some of my portfolio because I bought when it's very cheap. This video is a little bit longer, but I believe you have learned a lot from it. And if you do, please share it to your friends. Please like and subscribe it. And I will see you guys in the next video.